Yes, sir. It's your boy B Hayes. We back with another one, guys. So let's go ahead and jump right into it. Before we do that, watch out for spam, WhatsApp in the comments down below. Feel free to join VIP to be alerted whenever we get in and out of plays. Also, get your free stock from down below. Hit me up for a 15-minute, 30-minute phone call full of value, full of gems, change your perspective on the market. Let's go ahead and take a look at it, guys. Dive right into it because the day have been crazy. The market all over the place, crazy volatility, crazy choppiness, calls and puts all over the place, especially if you didn't get in at a specific moment and got out, took your profits and chilled because it's insane. And exactly what's taking place and happening, I already told you guys this was going to happen before it happened. During market economy shakeups like we're experiencing now, these are times you want to be very, very conservative in the market or simply just sit on the sidelines. But people like me, I'm a scientist. I'm gonna always be experimenting. So I usually use the conservative standpoint, meaning I'm going to, keep batting because even when I don't supposed to be out there, I learn things and all that experience, a snowball effect over a half a decade, then going into a decade is going to just become a powerful thing. So, anyways, and then once you get to a certain point, $100, $200, $300 on the option play to see what happens, you just drop in the bucket. But when we talking putting a few thousands of dollars up there, now it's like, oh, I gotta be more meticulous with it. But anyways, that's why I always tell you guys in the VIP, I let you guys know when weeks is as of this week and last week to let you guys basically know it's very, very risky out there to be risking your hard-earned money. So, swim at your own risk. Very dangerous, if that makes sense. But anyways, let's go ahead and take a look at it, guys. Jump right into it. Get you guys in and out. I was telling you guys when these banks started collapsing, starting with Silicon Valley, I told you it was going to be a domino effect. More banks was going to start to collapse, lots of them. And then soon, a couple days after I had said that, a week later, articles came out about 150 other banks could basically collapse. And prior to that article coming out, they had said, the banks, when it was collapsing, they needed collateral, they needed money, they needed leverage from other entities and sources. They were saying, oh, we don't got it. And then they went back and was like, oh, we got it. Well, look out for y'all, right? So it was the hot and cold switch, I tell you they do. And as I told you guys, as that helped ease tension, helped the market goes up whenever the banks was able to get their rescue, I told you guys it was going to come out later on this week and hit you with something else that was going to put the market into turbulence, meaning something else was going to happen with these banks, meaning they not, done out of the bad state that they was in, and also something just going to happen in the nature of the market, right? And so as we can see, stock slide following the Fed's rate hike. I told you guys that was a problem. We got the banks collapsing. We got inflation still a problem. Fed still have to raise interest rates, and we still got all the other little problems we got going on with the stuff in the sky and all the other crazy mess. So stock slide following Fed rate hikes. Dow sheds more than 500 points. So the stocks tumbled on Wednesday as Federal Reserve continued rate hikes, hiking rates, while at the same time acknowledging turmoil in the banking sector could slow the already fragile economy. Regional bank shares led the slide, adding to the stock market decline and the drop in regional bank shares were comments from Treasury Secretary who told the U.S. Senate that it was not currently working on blanket insurance for bank deposits. So we don't even need to know all that extra stuff, guys. Like I told you guys, I just focus on the outside core of the news. We want to focus on what the Fed's motive is, what they just did, which we know they just hiked interest rates, which we already knew was bound to happen due to inflation still being a problem. And we also want to know what the news is on the banks, what going back to the banks. We understand what happened. Y'all see it's kind of, try to wipe it away a little bit on yesterday and the day before, and now it's being brought back up, which we already knew it would, right? So like I told you guys, don't be fooled by the bullishness. The market is very much well oversold and ready to, run like a bat out of hell like we've been seeing. But before that happen, it's going to be a lot of, BS in between, ups and down, spikes up, huge drops back down. And even though the market is well oversold, it could still come down to even newer lows, guys. That's what you guys not understanding, but it's definitely there in the possible to happen. Like I told you, look for a $10,000 Bitcoin. Don't think it's going to happen. Especially, I mean, I do know that it could happen, but it just seemed like impossible. Don't seem like it's going to happen, being for the fact that it's more powerful and more money is being shifted over there to crypto than it is anywhere else, being for the fact of what's going on in the banking industry and all these other things, right? So anyways, but those are the facts. So you already know, and it's being weird, man. Weird. See how they try to play us with Bed Bath & Beyond? I'm not just saying that because we own it, guys. It's just the fact that it's obvious. Bed Bath & Beyond is being manipulated, still stagnant down there at the bottom. Look, I wouldn't be surprised if it tried to drop towards 50, 60 cents because it haven't, bounced properly like I expected to do yet. So, be on the cautious, on the lookout, my VIP members. Be ready to dodge that position if so, to save you some and get back in at an even lower price. But it should definitely be ready to pop here soon. But with this crazy market, guys, like I say, it's best to protect the capital that you already have, then try to focus on making even more money right just yet. Because then you end up losing what you got and your main problem would be just getting what you previously had back. But if you can just focus on keeping what you got, the money is going to come, guys. So anyways, Bed Bath & Beyond ended at 80 cents. Tesla finally like it's want to drop. We had an eye on that, made money. Lost money once or twice on Tesla, but made money multiple times, time after time. Carvana, crazy spike this morning. Gave all the gains back. We got in at the perfect deal. You're looking for that to bounce tomorrow and get out of that play. AMC ended at 441. Didn't see a continuation. Bled today. GME 23.45. Still holding up great. But I told you guys if it break 23.30, what? If it break, let me be specific. If it break 23.31, which is very close, which I think it'll do tomorrow, it's going to drop. Have a nice pullback drop significantly. So you already know, guys. You already know what to do. Add your boy on Instagram, though. Join VIP. I love y'all. Hit me up for a 15-minute, 30-minute phone call. All that good stuff. I love you. We out. And God bless you. We go.